What's up everyone, it's Karthik with MoneyVest. Welcome on board for our market open live stream. Hope you all are doing great and are having a great start to your Tuesday. We just came back from a long weekend, so long Memorial Day weekend. The markets were indeed closed yesterday, but I did show you guys the futures that were gapping higher, hitting a brand new all-time high, and it's no surprise the markets pre-market are looking very green. So we got the Nasdaq 100 sitting at just over 1.2% higher. We got the S&P 500 up over 74 basis points. Tesla is up almost 1%, with Nvidia pushing up another 1.3% in pre-market. We got crude oil sliding down further, down a little bit over 4%, trading down in the low 90s. In fact, it was trading at sub 90 bucks a barrel for a very short period before bouncing right back higher. And we got volatility here sitting at just a little bit under 17 right now, with Bitcoin at just over $77,000. So hope y'all are doing great. Welcome on board. If the audio and the video is good, just give me a thumbs up. Can't hear you. No audio. Very weird. Is it happening for everyone, folks? Can you guys hear me or no? Oh my God, Chente, you're joking. Come on. All right, so audio and video is good. Perfect. All right, we're good to go. I have the fan right now at full blast because the heat wave is insane out here in India. It is 45 degrees Celsius. It feels like literally like an oven when you are outside. And temperature-wise, it might be quite similar to what I've experienced in Dubai, but the wave, the hot air is what is really brutal out here. As soon as you step out, you just get blasted with hot air, which is going to absolutely crush you. It's actually crazy. And I have a lot of respect for people working outdoors. Like I commend them a lot because I just got here last night, and this morning I went for a workout, and yeah, it was bad. It was bad. As soon as I got done with the workout, I was like in a complete mess. Gotta keep yourself hydrated. So definitely do drink a lot of electrolytes, a lot of water. It's very important. So it's brutal. And but yeah, back to Dubai on Friday. So just out here for a short week, just because my nephew's visiting. So just been spending time with him, and my brother and my sister-in-law, they're visiting. So was just here for a few days and then back on Friday. Okay, perfect. Good morning. I can hear but white noise. Yeah, so that might be the fan. Hopefully it's not super bad. Hopefully my audio is coming through clean and clear. But if it's a little too much, I will turn it down and I'll sweat for the rest of this live stream. That's okay, but you guys let me know, okay? If there's a lot of white noise, if you're having a hard time kind of hearing me, then I'll just turn it down a little bit there. Thoughts on SoFi? Don't mention SoFi. Watch out for the flying table. Yes, I did a full video. Please do check out that video if you haven't already. Because I spent a lot of time going over SoFi in that update, and it's gapping up, so that's good. I mean, it's already pushing up 4.5% here in pre-market trading, so we're back up to 1633. So we're seeing some momentum there. Resistance is going to stay up at 1629, 1630, close to these levels here for SoFi. That's going to be that target, that resistance right now. If you do get a breakout on higher volume, then we're targeting next levels all the way up to 1987, close to 20 bucks for SoFi moving forward. So that's going to be that next level to watch moving forward for SoFi there. Okay, keep the fan on. Perfect. Thank you. You guys are awesome. Don't sweat. We can deal with it. It's not that bad. Perfect. Finally, join the MoneyVest subscription. Not into computers, so need explanation on how to negotiate your Patreon. So yes, definitely email me, admin@moneyvest.com. We can schedule our first Zoom call. This is available for all new members as an introductory call. And I'll help you how to get connected to Discord, how to get connected to our MoneyVest website, because there are 3 places that you need to be on when you're part of the MoneyVest community: the Discord, the Patreon, and the MoneyVest platform. So those are the 3 things that we offer, right? Because all 3 things serve very different purpose. If you're looking at a lot of educational content videos, a lot of the material, the content itself lives on Patreon. So this is where you can find a lot of collections, fundamental analysis, technical analysis, options trading, psychology of investing, stocks and personal finance, options portfolio updates. Everything lives on Patreon. All the videos, the PDFs, the spreadsheets, everything that you can download from Patreon. Then Discord is where we engage day to day. So that's our real-time communication channels. We've got multiple channels for trade alerts, for engagement, private chats, different kinds of channels for long-term investing, swing trading, options trading, day trading, things like that. That's where we communicate during market open hours and also during off-market hours. People never sleep there. We just want to talk about the markets. And then the MoneyVest platform, this is your stock analysis platform that we've built in-house. You can pretty much conduct a full-blown fundamental analysis on any company, any stock, any US stock, and also calculate your fair values. We got a lot of calculators. Our entire shopping list is on here. The MoneyVest index is on here. And then this will give you access to pretty much all the functionality and features, the earnings calendar, economic calendar, as well as the portfolio manager that we're going to be launching very soon. So schedule a call with me and I'm more than happy to help, get you set up. So taking profits or going long. So right now the goal is very simple, for us to continue to stay invested long. As I mentioned before, my job isn't to, sell and then start shorting the market. I'm not here to bet against the market trend. 78% of the times, 72% of the times the markets have statistically gone up, which is very strong odds in your favor if you are invested long. You don't want to be in Michael Burry's position where you're constantly trying to short the market, expecting some kind of correction or crash, because yes, they do happen. Yes, we do see those corrections and bear markets once every few years, but they're very hard to predict. And they're also, from a timeline perspective, it's not the best bet that you want to make. You want to be invested long. So in my view, I think it's really important to be a long investor with hedging using options by shorting, right? So basically you are selling calls and selling puts. And so essentially it's a negative position. It's a short position because you're not buying a long put, you're buying a short put, or essentially you're selling a put. So that's a short put or a short call. And that gives you that negative position. So for me, it's like long stocks, short options. That's the strategy that I employ. And that's the higher winning strategy. That's a high probability strategy. It's got a lot of success rate. And over time, you're able to build confidence and trade and invest much better. So yeah, that's my answer there. Taking profits or going long. So staying long and taking profits along the way if I see those opportunities. Good morning, Brother Karthik. What do I do with my BMNR? Cost basis 37, record tokenization, 1 blockchains, and Ethereum as 1/3 of that business, but doesn't reflect in the price action. I think BMNR is what I've mentioned before, very similar to crypto positions as BITX, is a asymmetric, high risk, high reward opportunity, right? So I wouldn't treat BMNR as I would treat Nvidia or AMD or, Microsoft or Google or any of these companies that are part of the shopping list, because those are actual businesses, companies that are generating cash flow, earnings, and revenue. And those are those long-term, high-quality core positions. BMNR, BITX, Ethereum positions, any kind of crypto-associated positions. These are a little bit more speculative in nature, and I would highly encourage everyone to allocate just enough that you are okay with that allocation, right? So you don't want to be over or under allocated in that position. I would much rather be under allocated in something speculative than over allocated in that position, right? So it's very important to kind of assess that risk yourself. Now, when it comes to BMNR, it's directly linked with Ethereum, right? So if Ethereum does well, so will BMNR. Right now, Ethereum is pulling back again. It's coming down to $16, $17. That's ETHE. That's an ETF that I also have. And then if you come over to Ethereum price, we are looking at, again, 2200, dropped back down from 2400, so it's down about 13.5%. So again, it's been selling off quite aggressively. So we got a very strong area of support there for Ethereum, right? So again, it's going to be quite linked with Ethereum. So if Ethereum has a long-term future of appreciating, then BMNR will also follow. Yes, only 8 likes and we got over 181 people watching. Please make sure that you drop a like. I would really appreciate that. Only 43 likes right now. So we want to get to at least over 100 likes in the stream. I would appreciate that a lot. And it helps us grow the channel, get more people involved, have a very detailed discussion on on the markets, because the more people you have, the better the discussion, the more engaging it's going to be. Okay, so stay long in the market. It's still being bought into Iran deal change. If that's the case, we almost can't have a recession until October, but then that's Xmas. So yeah, any kind of recession predictions as well. I wouldn't necessarily make any kind of recession predictions, because as we know, like it's very inconsistent to try to predict when the next recession is going to be, when the next bear market's going to be. I've mentioned this before. I know this is what sells. I know what this is what gets most of the views, is when someone's putting a prediction out there. But in my experience and from my mentors, things that I've learned from Howard Marks, Peter Lynch, Warren Buffett, Ray Dalio, maybe not Ray Dalio, but then Charlie Munger, like they understand that they don't know. So the greats know what they don't know, and what we don't know is the future. And we're constantly investing in a world of uncertainty, right? So markets are unpredictable, the world is unpredictable, and so we can't with any certainty predict what's going to happen tomorrow, next week, let alone a year, 5 years from now. And so that being said, how do we invest in a world full of uncertainties? How do we invest? How do we make decisions when we don't know what the future holds? Well, we look at the bell curve and we make decisions based on the most probable outcomes, based on what we know today, based on the present situation and the circumstances, and again, whether the risk reward and the value that we're getting is worthwhile for the price that we're paying. So price is what we pay, value is what we get. One of the greatest quotes from Warren Buffett, and that's what we're looking at every single day. We're logging into the markets, we're looking at different asset classes, we're finding where the opportunity is, we're finding where we can get more value than what we're paying for the price. And that discrepancy is what represents that risk reward ratio in the market. So who do you idol in investing or trading sector? As I just mentioned, it's going to be Warren Buffett, Peter Lynch, Howard Marks. I've learned a lot from Howard Marks and Peter Lynch. I've read both of their books, both of them. I highly recommend. I think those are books if you want to actually make this a career out of yourself, like if you want to be investing and trading for a living, and you want to do this like for the long haul. I highly encourage everyone to read the books from Howard Marks and Peter Lynch. You will learn so much about equity valuations, about market cyclicality, about psychology behind investing, how to get to second level thinking, how to think against the trend, against the herd, and there's just so many really, really important lessons in those books. So highly recommended, because those are, like, in my opinion, required readings for somebody investing and trading in the market. Okay. Good morning, Caddy. What is the reason Meta lagging when compared to other big players? Meta is spending so much money. Shareholders want an explanation or a slowdown. So yes, I think their CapEx spend relative to the revenue growth is what investors are trying to question right now, is what we're trying to understand. Because Meta's another one of those companies that has little to no exposure to like data centers. They're not like they're building their own data center or their cloud computing services. So Meta primarily depends on advertising, right? They're optimizing for advertising in the future. And so their entire CapEx is built around how can we make ads better? How can we optimize our advertising business so that it continues to grow faster, much better, and again, employing AI in any way possible. So that's the only reason why, because other products, other services, other big players, they do have a lot of exposure. Microsoft, Amazon does, Google does. So all three of them actually have cloud services. They're hyperscalers, right? They're investing heavily in data centers. NVIDIA pretty much literally building the brains behind what the world is building. Tesla, again, different story. Apple, all these companies are building, things of that nature. But Meta primarily focusing on advertising. So their major CapEx is the big question mark. Now, the one thing that I do like about Meta is that it's a very adaptable company. It's a very, very adaptable name, because they know when to pull the plug if something's not working out, and they know where to continue to push the envelope, right? So with Mark Zuckerberg, this is something that I do like about him, is that he will not shy away from spending money in what he believes the future could look like. But then if it doesn't work out, he'll pull the plug and then he'll focus on the core business and growing that business, right? So yes, earnings do kind of temporarily take a little bit of a hit, but Wall Street kind of knows that. And that's exactly what we went through with the metaverse mess. where Meta was spending billions of dollars building this metaverse, which never really took off. And then eventually what happened was, of course, Mark Zuckerberg shut that entire project down, and then moved it into expanding their core business. And they are moving in the right direction. Like, everything is moving in the right direction. App usage, traffic, users, everything is hitting record highs. But right now their capex is what markets are trying to figure out, right? What's going to be that capex versus their revenue growth. What about SoFi? Robinson is asking, of course. Please do check out the video. Again, I went over SoFi in that video. It was a big hit. Lots of people watched it. So I highly encourage you to watch it. It's up 4.5%, so pushing up to its resistance, 1630, 1650. And that's the level that we're watching right now. Could you please talk about iron? Yes, let's take a look at ELF chart and then look at iron. So ELF's chart actually looks pretty good. I mean, we are now down to that support that we were talking about. Last week, ELF was down a little bit over 6%. So support level is going to step at a 49, close to $50 for ELF Beauty. We got a resistance all the way up to $68. So this right here is going to be that level to watch. And right now we are in this lower high and lower low pattern. So I do think that ELF actually makes for a pretty decent swing trade here. Given that it is trading down to that support, it's now starting to bounce right back higher. I would put a stop loss at below 49 bucks and a target up to $68, $69. So this right here would be that resistance and that target. And support level is going to step at a 49, close to $50 for ELF. So that's going to be that level. So let's talk about iron. What are we doing with iron here? So a lot of consolidation sideways, pushing up 4.6%. Iron's also made a very nice, strong recovery. So it's pushed up from 30 bucks, jumping over 91%. So, just moving, just shifting back higher. And resistance all the way up to $73, $74 for iron, with a very strong support, as I pointed out, sitting roughly at around this $47, $49 for iron. So another resistance is going to stay put right about there. So that is the level to watch for iron. It's going to stay put at $62, $63. Okay, let's see. When SpaceX up? The Florida boys must be hungover this morning. Why is that? Why? When SpaceX? So SpaceX next month. The IPO for SpaceX is going to be next month there, I think in June. And I think overall it's the valuation is coming in at an insane price. I think it would be crazy. If it launches at 1.5, 1.75 trillion, I think the market cap is going to be crazy. Ed Yardeni breaks down the reasoning behind hitting 8250 as the S&P 500 year-end target. So we can maybe listen in on that as well. I think that might be quite interesting interview. Ed Yardeni is also a very, very good market strategist. So I listened to him. He's got a whole website, where he breaks down a lot of charts and all that stuff. So it's pretty cool. A lot of research, a lot of market analysis. So we'll listen in on that as well. Although Ed Yardeni also did mention the bond vigilantes are back because of the yield. So we're going to listen in on this interview. I'm also listening it for the first time. So let's just turn off this.
Indicated. Join us now, Ed Yardeni, president of Yardeni Research. He came swaggering in here like he knows everything.
No, I don't.
You've been right, though.
Thank you.
You are welcome. Last time you were on, you went from 77.
7,700 to 8,250.
To what?
8,250.
By
the end of the year, and 10,000 by the end of the decade.
Tom Lee recently has said best couple of years that we're going to see in the stock market in his lifetime, or something similar to that. You've got some non-obvious reasons to make that case, don't you?
Well, I think it's actually the obvious reason, and that
earnings?
It's earnings. Yeah, I've been recently talking about FOMO versus FEMO. FEMO's fabulous earnings momentum, and that's really what's been driving the market, not FOMO, not fear of missing out.
So it almost makes sense. I guess when I said not obvious, I meant given what's right in your face that causes people to think, oh my
Yeah,
God,
of course,
stocks
yeah.
are over,
Yeah,
all the
there's
things
plenty
that
of things
make
to
you
worry about, yeah.
Yeah, the people that consistently build the wall of worry that the market climbs.
Yeah, I think what's been largely missed is the resilience of the economy. You know, the economy is kind of like Rodney Dangerfield. It's been getting no respect.
And then we got to figure out what is responsible for that. We know it's the greatest economy in the world.
Yeah.
It always will, always has been. But then what else? Is it AI? Is it
I think
deregulation?
I think, you know, it was about in 2024 that everybody was talking about American exceptionalism, and then that the whole thesis kind of fizzled out in 2025. But we have amazing capital markets. There's a tremendous amount of capital available for innovation that's driving the technology revolution. The technology revolution is driving productivity, and productivity is fairy dust. It makes everything better in the economy, better growth, lower inflation, real wages go up, and profits are great.
I mean, you look at the rest of the world, and all you got to do is look at the leading companies in any industry, especially technology.
Right, they're here.
Over the last even 20 years, even back to Google or, I mean, even anything involving the internet, and then you got Amazon, then you got social media, and you got Meta, and now you've got AI. It's all happening. Biotechnology or pharmaceuticals.
That's a huge.
It's all here.
Yeah, it's all here.
Why?
Well, I think this is still a very entrepreneurial society. There's a lot of people that are constantly looking at opportunities to come up with better products, better services, cheaper, better, and we do creative destruction better than anybody else. You know, famous economist and way back when, by the name of Joseph Schumpeter, said that.
Yep.
You know, that's what entrepreneurs do. He
said a lot of smart things, especially about the permanent leisure class,
Yeah.
which it ends up being so well off that they think they don't need capitalism and don't realize capitalism
unfortunately.
is where it came from. There are people pointing out that in terms of risk premiums, or premia, that we're at a point similar even to the bubble, though. There is froth, there is call buying, there may be some disconnect between fundamentals and the lofty levels.
Well, we've already had a few crashes, right? I mean, we had a crash at the beginning of last year. It turned out to be a great buying opportunity. We had a crash in March, turned out to be a great buying opportunity. I mean, the market.
The best one was in the pandemic at 2,300 on the S&P.
Yeah, I mean, that was an amazing buying opportunity. So I think there's a tremendous amount of wealth in the U.S. on a global basis that wants to invest in the U.S. And I think there's earnings is what's driving it all.
The thing that the unknown that we don't know, the unknown unknown. That's a crazy term, but what is it? What's looming that could cause a big problem?
I think it's on the geopolitical.
Nuclear holocaust is always.
Yeah, I mean, unknowns are unknown, but known unknowns. We know about the possibility that China will invade Taiwan. I mean, that would be a calamity, but it would be a calamity for China too, which is why
$150 oil might be a calamity, or not so.
Well, I think oil prices are going to be coming down.
You do?
Yeah. Look, geopolitical crises have traditionally been, almost always been, great buying opportunities. Market figured it out this time around as well. The shooting was still going on right through the end of March.
Right.
On March 30th, we made a low, and it's been up and away since then.
I'm just trying to think of a perfect storm of issues with China, issues that bogged down in Iran, higher interest rates, $40 trillion of debt.
Yeah.
I can paint a scary picture if you want.
Well, the debt story has been around for a long time. I've been doing this for over 45 years, and the perceptions that debt is going to create a calamity just hasn't happened. One of these days, it's conceivable, but you know, the reality is the Treasury and the Fed can always finagle things. That's what happened in 2023. The Treasury said, okay, we'll issue more bills and won't increase the amount of bond issuance. No, we've, you know, I'll worry about the debt when my friends.
Interest rates might be going up. The Fed might be raising rates.
Well, look, the thing is, as long as somebody's buying the debt, that's also the flip side of debt is wealth. You know, I mean, a lot of people that are very concerned about debt are saying, I don't want to be in the stock market. And then you ask them, so where do you want to be? They say, oh, I want to be in 10-year treasuries. I said, how does that make any sense?
All right, so coming off of this interview, 8,250 points is what Ed Yardeni is predicting by the end of this year, predicting again. So 8,250 is going to be representing about an upside of another 10.5%. That's actually quite a substantial upside for S&P still remaining this year, and that would close us out at over 19%. Another 20% year for the S&P 500, given that what we've just seen in 2025, 2024, 2023, all 3 years have been pretty strong for the market. I mean, 2022 bear market was pretty brutal, but since then we've seen substantial growth in the market there. And then 10,000 by the end of the decade. So by 2030, he's expecting 10,000. That represents about a 34% upside. So he is expecting a bit more normalization in 2027, 8, 9, and 30. So from 8,250, that's not a lot of upside going up to 10,000 points here on the S&P. That's only going to be a 21% upside over 4 years. So yes, some years we're going to be most likely below average for the S&P. But most importantly, he's talking about earnings. A few things that I do think that are very important to take note of is the risk premium, right? I mean, the earnings are good, right? They're strong. I mean, capital flows continue to be in the US. There's a lot of liquidity coming in the global basis. The investors all over the world continue to want to invest in US companies because US companies have that leadership, that dominance, as we have discussed. One of the big unknowns is really just the leadership and the dominance of the US companies. And if that starts to falter, then that's where liquidity starts to leave, because at the end of the day, like money is going to go where opportunity is. And right now it is, of course, in Max 7s and top 10s and, some of the biggest and the brightest companies in the US. Now, that being said, I mean, we do move in cycles, so I think it's important for us to also address the PE multiple for where the S&P is trading. We've talked about this before, kind of showing you guys the chart. We are sitting at over a 10% plus premium on the average of a 20, 25, 30-year average on the PE multiple, right? Ideally, I like the S&P at around 20. So anything under 20 is a good multiple for, in my opinion, for the market. And right now we're sitting at around 22, right? So that's 10% more than where the average would be for the S&P 500 based on its historical measures. So with that being said, I think this is an expensive market. It's moving higher, yes. Ed Yardeni mentioned FAMO, whatever, fabulous earnings momentum. I think, yes, earnings have a lot to do with it, but there's also a lot of FOMO kicking in. Because a lot of people have missed out on this reversal, because when we were pulling back, when we were seeing this entire sell-off, nobody would have guessed, right, that this would have been one of the best V-shaped recoveries that we've seen. A 19% move since the end of March. It's not even been 2 months. Not even been 2 months. It's less than 2 months, and the S&P has rallied 19%. Forget about the NASDAQ, right? I mean, the NASDAQ from its lows in March is up a whopping 28%. So this has been a lot of momentum. Of course, a lot of it concentrated in semiconductor stocks, in chips, memory, technology has done really well. So XLK, for example, take a look at this. From March 30th, this thing is up a 45%. That's technology, by the way. 45% move since March 30th, right? So it hit its all-time highs much sooner. And then it's also hitting its new all-time highs pre-market right now, sitting at 183.50. So I do think that the last leg of this rally has been driven by a little bit more of euphoria and greed and FOMO rather than just purely earnings, because earnings are putting multiples, questionable multiples, right? I mean, we're sitting at very high numbers here. And even recent IPO activity shows that. I mean, it's one thing that, okay, this momentum's driven by earnings if the IPOs are being done at sane valuations. But we're launching these IPOs at insanely high valuations. I mean, CRBS, for example, or CBRS, this stock right now is trading at over 120 times sales and over 700 times earnings when it IPO'd at 386. I cautioned everyone against it. I was like, you know what? This is insane. Like, this is a crazy valuation. I would not touch it with a 10-foot pole. It has already dropped a third in valuation. It's already down 33%. Valuation's back down to 56 billion, and it's still pretty expensive. And that's why I think SpaceX IPO, again, IPO activity is also a very good indicator of how frothy this market is, because it's a pure signal as to how much greed there is in this market right now. Because we're just kind of launching these IPOs at insanely high valuation. The public markets will correct, or they will end up taking the pain. So valuation for me, I think in this market is a bit on the high side. So, which is why I would be a little bit more on the caution side there. Okay, coming back to the comments here. So most of it, not a lot, most of it is just semis or stuff related. Yes, so that's where a lot of that liquidity is gone towards. Even when we talk about market breadth has gotten better. So if you take a look at this, stocks trading above their 20-day moving average, we're sitting at over 57%. And so, just a few days ago, we were sitting at down to 34%. So only a third of the market was trading above its 20-day moving average. And that was all concentrated in a handful of companies. So again, technology and semis were leading this market rally higher. But the good thing is now that we're seeing a bit more, broadening out of this market. Liquidity is actually going towards utilities, industrials, healthcare, energy, materials. So that's where we're actually seeing markets moving towards. And now, again, more and more stocks trading back above their moving averages. In fact, more than half are sitting above their 20-day moving average again. So that's a good thing. We're seeing markets kind of broaden out. There's market breadth improving. But valuations are still, in my opinion, a bit of a concern for this market. So I would ideally be, looking at a 10% correction from these levels, which again, is it going to happen? Nobody knows, but that's going to be my entry points for the market. Agreed. There's a lot of greed and FOMO right now. Caution is the word. And that's the thing, right? We want to be staying long. We want to be staying invested long. We don't want to be not part of this rally. I want to be a part of this. So I am 90%, 88% invested long. So if Nvidia goes up, Tesla goes up, Palantir goes up, if the market goes up, SoFi goes up, I will benefit. Yes, that would be great. I mean, stocks are going to be hitting new all-time highs. My portfolio is going to be hitting all-time highs. But that still doesn't take away from the fact that I have to be objective about where the valuation is and where my cash exposure needs to be. So it's just finding that balancing act, because just because we feel like the market's expensive doesn't mean that we need to sell and short the market, because markets can remain irrational, far longer than any of our decisions. So that's the strategy there. Now coming back over to stocks, we got about 20 minutes until market opens. Any questions, fundamentals, technicals, options, anything, we're more than happy to help. Macro, this is your time. So let's dive right in. I'm going to quickly go over to the Treasury yields as well. So the 20-year has been coming down, sitting at just over 5% right now. We got the 30-year sitting at around 5% as well. It's been selling off aggressively. It's down about 20 basis points from its highs of 5.2%. And then if you come over to the 10-year Treasury, we're sitting at just under 4.5% right now. So sitting down 1.5%. Okay, Oscar, let's take a look. How is Oscar doing? It has been pulling back. So my call strike is $27. $27 is still, again, pretty far away from where Oscar is, about 19-20% away. Even if it gets up there, I'm more than happy to sell my shares there. But I feel like it's going to be challenging because Oscar is already pretty overextended and overbought right now. So the RSI has been coming down. The MACD also just crossed below the signal line. So that's also a big signal there. And the price itself is starting to retreat a little bit. So support level is going to stay put at $18, $19. And my call strike is at 27. I still do have options. If I want to roll it, I can roll it. But I'm not going to do that until after it gets in the money, if it gets in the money. What do I think about Cisco? So CSCO, Cisco Systems hitting a brand new all-time high after years and years of staying where it was. Very similar to Intel. So it was up until November 2024, literally trading at the same price as it was during the peak of dot-com bubbles. And then since then, I mean, it's just been crazy, 176%. They've turned the company around quarter over quarter, very strong margin growth, 24% margins there, revenue, profitability, everything's moving in the right direction, 57% year to date. Earnings wise, we're looking at around 427 on earnings for this year. So I would argue, I think Cisco still makes for a good value there, given the valuation is still pretty attractive here. So 120 divided by 427, we're looking at 28 times earnings on a 2026 basis. So it's okay. It's decent. It's not like super expensive. It's not like 35 or 40 plus. But I would also kind of look at the PEG ratio. That's another metric that we do focus on, is the price to earnings over growth adjusted number. So 28 times is the earnings multiple, but the earnings growth for Cisco for this year is going to be 427 over last year's 381. So we're looking at about 12% growth. So 28 divided by 12, we're looking at about a PEG ratio of 2.33. So if you're looking at that PEG ratio, you could argue that, okay, this is a bit more overvalued for growth, because ideally it should be around 20 or much less than that, maybe in the mid to high teens. But it's trading at 28 times earnings right now. So yeah, maybe it has moved up quite a bit from its lows of $75. It's rallied 60% in the last 2 months alone. So just absolutely gone parabolic. SoFi again, of course. SoFi did a video, so please take a look at that. Let's take a look at Pool Corporation here. So market cap is 6.7 billion. Volume is actually quite low, but it's got a decent dividend of almost 3%. Annual revenue has been declining year over year. So from 6 billion, it's now down to 5.3. Quarter over quarter, also a little bit inconsistent. It is a profitable company, so that's good, but overall, it's been rather inconsistent right now. Support level is going to stay put all the way down here at close to 147, 148 for Pool, with a resistance all the way up here at close to 530, 543, 544 for Pool. And right now, it just seems to be kind of dwindling down. I would allow for it to come down to that support of 147. March 2020 COVID lows, and then see if it actually validates that support and starts to bounce back higher or not. Right now, it's also in a bit of a lower high and lower low pattern. So, this is the downtrend within which it's been trading. So that's the lower high and lower low pattern there. Okay, ServiceNow. Good morning, Jose from Brooklyn, New York. Can you talk about MNTS? Thank you so much. Yep. So let's take a look at Robinhood first, and Robinhood here, consolidating sideways. It's still part of the shopping list. I think these levels are quite attractive for Robinhood. $67 is going to be that very strong area of support there, and this green rectangle is the area of demand. And if it does break down further, we're going to be watching $50. So $50, $51 is going to be that next support, with a resistance staying put at $84, $85, all the way up to $92, $93 for Robinhood. So that's the area of consolidation right now for Robinhood. So that's the channel within which it's been trading. Coming over to MNTS here. Let's take a look. Momentous. So gapping up 65%. Looks like it's going to be a very small cap stock. We're going to skip past it. Jose, I'm sorry. 73, $74 million market cap. You guys know that we don't like to cover stocks anything that's less than $1 billion. We might even consider like $700, $800 million companies, but anything under $1 billion is not worth it. Trust me when I say this. Reason being is because these stocks can be very easily manipulated. $75 million can easily be, a high hedge fund trader's entire investment, capital, right? And they can buy the entire company. So these are very highly manipulated companies. They're small cap, like not even small cap. These are like micro cap businesses that I would just, look a little bit elsewhere. Unless, of course, you kind of understand the business over many years and you know what they're doing, and you kind of believe in that company long term, and you want to start with a small position and eventually build it up to a bigger position as they continue to report their earnings. But yeah, I would just like keep that threshold for us at least about $1 billion. Okay, MongoDB. So let's take a look at MDB here. So MongoDB, it's a platform that I've used in the past. In fact, when we were building the MoneyVest platform, we have used MongoDB before. I think we might still use it. Resistance is going to be all the way up to 444 there. So that's the resistance. We got a very strong area of support and demand for MongoDB around 140. And again, a lot of a consolidation sideways for MongoDB there. So that is the resistance. And right now, we're just seeing a lot of consolidation sideways for MongoDB in that range. So on the monthly time frame, it looks even clearer where you've got that resistance up here, we got the support down here, and it's just been bouncing around in that range. Okay, so MongoDB we just went over. SoFi we've already gone over multiple times. Let's take a look at ServiceNow. And ServiceNow here also bouncing off. So ServiceNow, I think I've mentioned this before. It's a good potential swing trade here, or at least it was. I mean, I wouldn't say that it's now, given that it's already starting to move back higher. But I would say like support at $82. If you do get a breakout over 105, then maybe it becomes another potential target up to 123, 124. And that's going to be a decent upside of another 17 to 20%. Support level is going to stay put at 106 in case it actually breaks above it. But right now, support at $82, $83 for ServiceNow. I think the valuations come down quite a bit for this business. Revenues are booming, profitability is expanding, and so this does make some sense at these prices. I think it's quite an interesting stock for us to look at. Can you check CPB? Let's take a look at what this is. The Campbell's Company. Wow. Absolutely getting crushed here. 6 billion market cap. It's got a pretty high dividend yield. I mean, of course it does after the big drop. From its highs of 49, it's essentially been cut in half or 60% down. Next support is going to be staying put roughly here, at roughly around $17 to $18 for CPB, and resistance is going to be right about there, around $24.50, $25 for this stock. Revenue-wise, it's a consumer, non-durable food, specialty candy stuff. So I don't think the margins are that high. We're only talking 4 to 5%. Revenues are a little bit inconsistent. Bit more linear growth, but margins are low, and I'm assuming the multiples are going to be quite low as well for this business. So $17, $18 next support on a weekly basis, monthly basis. It's been absolutely getting crushed and selling off there, but that would be the next target to watch for CPB. Okay, let's take a look at Home Depot. Is BMNR a long hold or a dump time? Again, it's an asymmetric bet. The risk reward is, you're making a bet on Ethereum. That's really where the bet is. If Ethereum starts to move back higher, which over the long term I could, see Ethereum doing well. It's for me like crypto, as I mentioned before. Let's say coming from a value investor, like looking at cash flows and looking at discounted earnings models and calculating fair values and all that stuff. It's hard for me to pinpoint where the fair value is for Ethereum or Bitcoin, right? So with the lack of that fair value, it becomes more of a speculative play. And that's exactly why I'm keeping my Ethereum and Bitcoin exposure to, let's say, 4 to 5%, right? I don't want to overdo it. I don't want to have 20%, 40%, 50% in crypto. I want to keep it around 4 to 5%. I think that's reasonable for me. That's a number that I'm comfortable with. And that's just my risk management in crypto. If that 4 to 5% ends up becoming 50%, great. That's 10x. If Bitcoin goes up from $77,000 to, let's say, $500,000, or long term becomes up to $1 million per coin, insane, right? Crazy appreciation. That's the asymmetry. If it goes down, it goes down to zero. So that's the risk reward there. That's the asymmetry of this bet. And for me, at least, that's how I'm approaching this, because there's no other way for me to calculate, okay, this is where the fair value should be for Bitcoin. And it's not like the earnings are increasing over years, so the fair value will update. It's purely, I would say like 99%, it's driven by demand and supply. It's driven by geopolitics. It's driven by inflation. It's driven by interest rates. It's driven by demand and supply. It's driven by where the sentiment is, where the perspective is, all those things, right? So when you are looking at crypto, I would only look at it from that lens, right? I wouldn't just, treat Ethereum the same as I would treat Nvidia, or Bitcoin as I would treat AMD. Completely different asset classes, completely different businesses, or I would say like just investment opportunities, and that's how we need to treat them. So with Bitcoin and Ethereum, as I said, it's a asymmetric, high risk, high reward opportunity. And when you ask me about BMNR, yes, I have exposure in BMNR. Yes, I have exposure in BITX. Yes, I'm down on both positions, but I knew that going in that this is going to be a volatile, high risk opportunity. If Ethereum jumps, if Bitcoin jumps, then these will also follow. But if they don't, if they stagnate sideways, that's the risk. So for me, this is a simple hold, not doing much. It's part of the portfolio of less than 4%, 3% allocation for now. And yeah, that's it. Focusing on the other 97% where actually it will make a difference. This one is kind of like in the back burner. I'll revisit this depending on how Ethereum and Bitcoin is doing over time. So let's take a look at MOD here. 5 more minutes left until market opens. We are looking very, very green so far with QQQs up 1.2%. We got the S&P up 70 basis points. We got NVIDIA pushing up 1.2. Tesla's up almost 1% as well. SOXL doing what it does best, up another 10%. Does this thing ever stop? SMH, look at that. $591. It's almost going to be approaching $600 there. 2.7%. How many people here are invested in SMH or SOXX? In semis, in semi ETF? Because we've been talking about SMH for over 4 years now, almost 5 years. I really want to know. Are you in SMH, SOXX? Or any other semi ETF? Because every day is like a party. Every day is like a good day if you're in semi stocks, right? I mean, SMH, I'm part of it, part of that SMH gang. Stefan says SMH, my favorite investment. Again, Stefan and I have been connected for almost 5 years. We've had a lot of conversations over Zoom, and SMH was something that we talked about a long time ago. I was like, keep it super simple. Don't even overcomplicate investing at all. Don't even overcomplicate it. We tend to make too many decisions with our money, and we end up shooting ourselves in the foot. If I could just like get rid of everything, just put SMH as your long-term hold, that's it. It's done very well. It's done incredibly well. Dollar cost averaging, DCAing into that. Oh man, 52%, more than half of you guys are saying no. Come on. What's been holding you back? Johnny says, I own a lot of AMD and NVIDIA since 2016, so I do not have SMH, but that's great. NVIDIA and AMD is fantastic. I mean, since 2016, 10 years of growth is incredible. Tempelov says AV. So let's take a look here. 3% higher. It's got electronic aerospace and defense company, 8.7 billion market cap. Revenues are growing. Looking at quarterly numbers, starting to pull back a little bit, but technically quite oversold. And I would put down a support on this at around this level here, 155, 157. So that would be the area of support, and a resistance all the way up here at close to 229 at 230 for AV. So that's going to be that resistance to watch all the way up to this level at around $408 for AV. No SMH for me here, only individual semis, AMD, Micron, NVIDIA. That's great though, that's amazing. Caddy just got an M3 competition and an apartment in Dubai because of investing. That's incredible, man. Guess who taught us the foundations, Caddy? That's incredible. I'm so happy for you. Please do share a picture of the M3 comp. I am very, very excited for it. I love the competition version of all BMWs. So I was thinking about an X5 as well, the X5 comp. It looks absolutely incredible, but I really want to learn more. So please do share if you are comfortable, if you're okay with it. I would love to see the pictures of that M3. 200 SMH and 200 SOXL. That's incredible, Shrikant. Congratulations. Can't buy any of them from the EU. Not even Schwab gives you the ability to buy. That's unfortunate. I'm sure there's going to be some alternatives that you can look at. Definitely do figure out, see if there's any alternatives to getting into semi-exposure. Where does the group go from here after market opens? I'm confused. Discord or Patreon? So Discord is where we spend most of the time. So that's where where we talk on a private chat every single day. That's where we go to after the live stream. SMH, thanks to you. That's incredible. Very, very happy. So Recently sold 300 SOXL, 100 SMH, 100 SOCL in multiple accounts. That's incredible. Congratulations. What do you think about SOLV? So let's take a look at that here. So we got Solventum Corporation and $77. Market cap's about 13.3 billion. Revenues are pretty consistently stable. Profitability strong. Quarter over quarter though, it's a little bit messy. Technicals, trading sideways. I would put down a support here at $62 and a resistance all the way up here at close to $86, $87 for this one. So markets are open, everyone. Thank you so much for joining, and I would love to hear more from everyone. And again, it's been an incredible journey so far. I mean, we've got a long way to go, I know, but it's very good to see markets at all-time highs, so many stocks at all-time highs, and everybody's portfolio at all-time highs. So thank you so much for being here. Again, link's going to be down below if you're interested in joining and being a part of our MoneyVest community. I would really appreciate that. And again, link's going to be down below. If you have any questions, email me at admin@moneyvest.com. Happy investing, and I'll see you all in the next live stream. Take care.